Whales in this market are potentially doing something very, very big, and I want to break this down for you because it could change how you view Bitcoin. Now, there's a lot going on here, and I need to break it all down for you very, very carefully. But before I do get into that, I just want to put a few things into perspective for you all in this YouTube video, because Bitcoin has been doing absolutely nothing over these last 10 days. If we break down what we've been looking at with this chart recently, and just kind of take a look at where most of the price action has taken place over these last 10, nearly 11 days. Bitcoin's only really been ranging between a 2.5–3% range for all of that time, and that is a very, very small range. It's actually why as well I ended up taking a little bit of a break from YouTube. I haven't made a video as well for 10 days, and that's purely because well, I just, I haven't really taken a break from YouTube in a really long time. I figured that, given that the market has had absolutely no volatility lately, it's a good time for me to make a video. I'm sorry, for me to take a break. You guys don't need me here to tell you the same thing 10 days in a row. And so, I decided, why not? But here I am. I do have some important stuff to talk to you about now, and I'm expecting some volatility to return to the market relatively soon. I have some technical reasons for that, but for the most part, I just kind of have a hunch, to be honest. I can't really put it down in technicals. I just kind of feel like it. Generally, when I felt like it in the past, something has happened. So I don't know, just putting it out there. Bitcoin has been ranging sideways for a very, very long time, but interestingly, what we've seen at the very same time is right here. If we take a look at these Glassnode charts, I'm going to hide my camera for a second. If we take a look at Bitcoin addresses with a balance of above 1,000 Bitcoins, that means the number of addresses that exists for Bitcoin with a balance of over 1,000 Bitcoins, and that is a shitload of money. I'm not even going to calculate it because I'm going to feel broke as fuck. But you can see one of the key things I was warning about, when we were initially in this range, and I actually made a huge video on this, was that a lot of the big wallets were actually selling their Bitcoins off when Bitcoin fell into this kind of $30,000 to $40,000 range, right? You can see a huge drop here where many of these wallets, it's not actually that big, but in relative terms, it's pretty large. We went from about 2,150 Bitcoin wallets holding over 1,000 Bitcoins to a low of about 2,100. So it's about 40 less wallets with over 1,000 Bitcoin. And by the way, I want to break down for you why this is important, right? This doesn't necessarily mean anything on its own. It could just mean that those 40 wallets with, let's say 1,001 Bitcoins each, just kind of moved 500 into one wallet and 500 into another, right? And so it's not like they sold it, but maybe they just moved them around. This is one of the flaws of on-chain analysis. But one of the other popular conclusions that this might lead people to draw is that big holders are no longer consolidating their Bitcoins in one place because they want to move them around and prepare to sell them. This is one of the advantages we have with crypto, because with other markets, we just can't see the flow of funds. We just can't. It's not visible. It is visible to the banks and the brokers and so on, but not to the common folk, you and I. With Bitcoin, it is. And so we can actually carry out this on-chain analysis and get an idea of where these things could be getting very ugly. It's also not the most foolproof mechanism for analyzing the markets, because, generally the conclusions that you're going to draw off this is if the extremely rich people and the extremely large funds are no longer consolidating their Bitcoins in one place, meaning they probably want to sell them, then maybe they know something that I don't, and, maybe the market's going to drop. Generally, I think that's a pretty good approach to take in the markets, but it hasn't been foolproof, and I just think it's worth giving you guys that disclaimer. But bringing us back to the charts here, we do see something quite interesting where, just recently we've actually started to see quite a move up. Again, in relative terms. In absolute terms, it's barely nudged up at all. It's gone from a low of about 2,112 to a high of 2,123. It really didn't move by much at all. I don't want to, start blowing this out of perspective or anything, but we did see a little bit of an increase here, and, this could definitely lead some people to believe that actually, these bigger players could be stepping back in. Unfortunately, we don't have those same signs on other charts for on-chain analysis, showing us, in this case, the number of addresses with a balance of over 10,000 Bitcoins. This has actually been dropping, pretty much since that 60K range that I was talking about. It really started to sell off. It really started to move down. By the way, there's less than 100 of these wallets, which is mind-blowing. But it really started to drop down, kind of right as Bitcoin was falling below $40,000, which I was mentioning could be a massively disastrous thing for Bitcoin. And so far, I don't want to say it's been disastrous, but it's not been comfortable, that's for sure. You know, and it's much the same for the 100 Bitcoin addresses as well. It has, I mean, it's kind of stopped moving down, right? I mean, like people are, you know, broadly speaking, not removing their Bitcoins as much, but it's still, it's not really supporting that case. However, on the bullish side, what we do have right here, I think that could potentially turn out to be quite a strong sign for Bitcoin. It's just that to me it's looking like Bitcoin you know, very much is actually, if I just get my face cam back on, you know, following a quite a similar pattern to what we had last time in summer of last year. You know, it's much the same as what I was talking about before, so those of you who are subscribed will know a lot about what I'm about to say. But, you know, really we ended up falling into this range, testing the downside a couple times, testing the upside, and we, you know, kind of really just gravitated towards the upside for the first little bit, and then we gravitated towards the downside for the second half of this range, where we ended up breaking down and, you know, pretty much faking out, but then pulled it back and managed to rally higher. You know, we kind of did something similar right here. You know, we were really testing the upside quite a bit. To be fair, we have been testing the downside quite a bit as well. But what I find interesting is that we're doing it in the same range. And one of the other big things that on-chain analysis is able to tell us right now, and unfortunately I don't have the chart up on screen right now, but it's actually, it's the volume profile. I'm wondering if I can find it. Nope, probably not. I don't know the actual name for this chart, but what it is basically something that shows you where, like what price, at what price many Bitcoins throughout history have been exchanged. And one of the key things that's happened in this range now is that, and I found this based off someone from Twitter, I forgot his name. I should be giving credit to him. This is unprofessional of me. I'm very sorry. I'll try and find it and put it in the description. But he pointed out that, you know, given how, I mean, he didn't say this part, but given how Bitcoin has been kind of around the 38 to 39K range for a very long time, you know, we've actually now gotten to a point where this is the single most, how do I say, active price range for Bitcoins being moved around in history, in all of Bitcoin's history. You know, it was a significant number. It was like either 4% or 11%. It was a huge number of all Bitcoins that have ever been moved have been moved at this price level between 38 to 39K. You know, that tells us something about the solidity, I guess, for lack of a better word, of this price level. This is a very, very important price level. And again, if you don't believe that Bitcoin long term is going to suffer, then this makes it a very, very important level. Of course, what it means is that it's also a very psychologically charged area of the market, right? Those of you who were back here in 2018, for example, remember that this, pardon me, the $6,000 range was a very psychologically charged area on the chart, right? We were finding a lot of support, and we even found a little bit of resistance from there. I would expect this level to be the same if we end up dropping down, where it's going to turn into ridiculously difficult resistance to break if we rise up from below. But I think that if we do manage to get a real sustained breakout, and then if we ever fall back down here again, which of course could happen because nothing is guaranteed, and I mean, even if Bitcoin goes to like $100,000, I would strongly expect this 39, 38K level to hold because of how important it's become now in the market in terms of being a technical support level. By the way, we can see this with the normal VPVR indicator, right? If I pull this up on the chart and show you this, you're going to see pretty clearly that a lot of volume for Bitcoin has indeed been exchanged right here between you know, what is this, like kind of 37.6 all the way up to about 39.7, so roughly 38 to 39K. A lot of volume has been exchanged for Bitcoin right here. Let's actually zoom out even further onto the daily time frame. We're going to get a big look at exactly what's going on. This is somewhat of a difficult chart to use right now, but you generally get the idea. There's a big spike happening right here at 39K. This is actually the point of control on the chart, which means the area where the most Bitcoin, the area of Bitcoin is traded around the most, tells us a lot about where these areas have pull in the market. And I think that's really important because, again, like, I can't tell you exactly where I think we're going to go right now, although I'll definitely talk about that in just a minute after you hit up that like button if you're enjoying this YouTube video. But what I can say with a lot of certainty is that if we attack this level as resistance, you better expect a massive struggle, and the very same if we attack it as support. Of course, the problem here is that because we're in a downtrend, we are, you know, just kind of generally polarized to the downside. It's the same thing I was saying over here, and I'll put my hands up, I was wrong about it, but that doesn't mean that I'm going to change my principles with my analysis. Bottom line, ladies and gents, Bitcoin was in a downtrend over here when it ended up consolidating and breaking down, and it's in a downtrend right now, and it's consolidating. And you better believe that if this thing breaks down, there's going to be a really good chance of Bitcoin dropping far lower. Ignore this box. Let me just remove that. That was random. And so this is one of the things that's actually concerning me, because you can see with this kind of symmetrical triangle that I've drawn that Bitcoin has really been coiling up for a little bit, right? I mean, if we look at this on the 4-hour time frame, it's actually pretty accurate how Bitcoin has been, finding support along this line. And I think that if Bitcoin does lose this line, it could become a little bit of a problem. The good news is that I am seeing some support for Bitcoin around that kind of, 35K area, which I've outlined to you all before in numerous videos. So again, those of you who are already subscribed will know a lot about that. This area has been a nice bounce zone for Bitcoin 2 times previously over the past 2 months, and so I would expect it to be support again if we end up coming back down here. But bottom line, falling back down to that level would mean that we have fallen out of quite a large time frame bearish symmetrical triangle. So if I were a bull, and I'm not, I'm neither right now, I would not like to see that. The fact is that when we are coiling up in these kind of price ranges, what's really happening is that bulls are not able to get what they want, and bears are not able to get what they want. And so where they're trying to, bears are trying to push the market down, bulls are trying to push the market up, they're just kind of fighting. They're at an equilibrium. They're not, like, one's not really getting the direction that they want to get. And so we're coiling up, and that's resulting in people getting frustrated, and we can actually see that with the fear and greed index, because if we take a look at this right here, this is going to tell us a lot actually. The fear and greed index today, yesterday, last week, in extreme fear territories. If we look at this with the chart just here for a minute, we can see that going all the way back to pretty much the beginning of this month, we've been floating around fear or extreme fear areas on this fear and greed index now for 10 days, quite a long time. And so by that measure, it actually makes a lot of sense for Bitcoin to rise up. There's also some data, which I won't bring up on this video, to suggest that there are less short positions open on the market now, that short positions are being forced closed. I haven't actually looked at that, which is why I'm not going to bring it up, and that's why I don't want to talk too much about it. But I am aware that that's something that's playing on the market a little bit. It's actually on Bitfinex, so let's take a quick look. The only reason I didn't want to look at this on video is that this data can be very, very unreliable. But you can see that a lot of short positions have closed up right here. I don't know why the market's not done anything, which is very, very weird. And again, that's why I don't want to dive too deep into it for this video right here. But I do think that just seeing how people are generally quite fearful, and it seems like leverage contracts are actually closing up. I mean, look, previously when the market kind of consolidated at these levels of fear and greed, or in this case, just extreme fear, we did get some nice pushes to the upside right here over the past 3 months. And of course, over the past year, we've spent a lot of time in this, area of, quite fearful market sentiment. Previously we spent kind of 13th of May all the way up to, call it middle July, end of July. That is 2.5 months, if I'm not mistaken. This time I think we've actually exceeded that now. I mean, kind of from, let's just say from the end of November to the present day, that's like 4 months, 4.5 months. We've really been battling it, with this range right here. I want to make that point very, very clear. I mean, we have far paid over what we needed to pay for all of the euphoria that we've enjoyed. I mean, this is significantly crossed that line of being what I would consider to be an overcorrection at this point. And so, again, just kind of looking at the real world events, if these things make you bullish, which they certainly do for me, then I mean, we could be looking at quite a nice formation for Bitcoin here to potentially find some support rising higher. One of the good things that I'm seeing right here is that, one of the key resistance indicators I was looking at was the daily EMA Ribbon. And if you don't know how this works, then pause the video right now and watch my free tutorial on how to get this indicator and use it. This is part of the 𝗧𝗢𝗥𝗙𝗦 Academy course, which I'm about to re-record, by the way. I'm so excited for that. We're going to update it and bring it completely fresh into 2022. Not to say that the information isn't already fresh, but I was a lot younger back then, so I think I need to re-record it for that reason. And yes, this video is absolutely amazing. You're gonna like it a lot. It's actually not really providing that much resistance to Bitcoin anymore, in my opinion, just because we've lost a lot of the spread. There is still some spread here, and it's not helping the market for sure. But I'm just not too worried about it compared to how it was before. If you look at how it was able to have a little bit of a spread before. It stretched about like an 8.5% range. At this point right here, it was pretty wide. It stretched about an 11% range. But right now, we compare it to those 2 points. It's only stretching about 3.7% high. It's just not a very big EMA ribbon. And one of the things that this tells me is essentially that this indicator is a display of where resistance is according to momentum, right? And if the market has stopped selling off and it's now just kind of consolidating, what does that tell you about momentum? Momentum has left the market, right? There's not that much momentum in the market anymore. We'd see this if we look at, for example, the weekly time frame with the RSI. Take a look at this right here. You can see that the market was losing strength rapidly during this sell-off, and during this sell-off right here, the market was losing a lot of strength. But right now, it's kind of stabilized, and it's just around neutral levels on the RSI right here, showing us that things have cooled off. We're not getting stronger, but we're not getting weaker either. Momentum has dissipated. I think that's quite important to keep in mind right now, because it does potentially mean that, just given how, one of the things that I talk about is there's 2 ways these markets correct, right? If we've had a big rally, or even if we've had a drop to the downside, we need corrections. I always say this, and if you've been subscribed for a long time, you'll know about this. If you're simple-minded and you can't accept the idea that Bitcoin could go up or down because analysis is a game of probabilities, not certainties, then guess what? Get the fuck off the channel. You already know it. 𝗧𝗡lies is back. It's been a 10-day break. I'm recharged. I don't know if I'm going to be back on the daily uploads right now, but I'm definitely happy to be back for the minute. What I think is very, very important to keep in mind is that there are 2 forms of corrections. The first one, when you're rising up, is that you drop down, which we've already experienced. And the second one, when you're rising up, is that you just kind of stabilize and you have a time-based correction. All that's important is that you don't carry on moving up. As long as you're doing anything but moving up, you're generally correcting that trend. And there's many, many examples of this. Generally Bitcoin has quite vicious price-based corrections, but it also tends to have a lot of time-based corrections, right? A good example of a time-based correction, in my opinion, was what was happening right here when Bitcoin managed to hit that $20,000 range for the second time. It managed to rally up really, really nicely. And yes, it did get a little bit of a price-based correction, but for the most part, it just traded sideways, especially when we, play the chart forward. It didn't look like much of a price-based correction. This was definitely just Bitcoin trading sideways. That's more of a time-based correction. Again, when we're moving up, more of a time-based correction. This is what happens when the market is really bullish and the bears literally can't even push the price lower. All they can do is keep it from blowing up again, where we keep on hitting the same ceiling, but eventually we blow up above it and we get major, major blue sky breakouts like this. I actually traded this move inside of 𝗧𝗡lies VIP and pulled one of the biggest profits of my life. So that was very, very fun. And I'm fully expecting times like that to be coming back to the market because of how little volatility we've had recently. We are looking at huge price explosions. It's going to be very easy for a lot of people to lose a lot of money on these kind of moves. But I have still been watching this market during this YouTube break, and I am definitely looking at a few positions which I've already briefed 𝗧𝗡lies VIP members on. So if you do want to jump inside, steps are on screen right there with the first link in the description down below. Then my name, my @𝗧𝗡lies button at the bottom of any post inside of 𝗧𝗡lies Gold, and then send message to ask me how to join 𝗧𝗡lies VIP. Because of that, I am potentially seeing some quite hectic price action ready to come back into the market. And I think another reason for that is, we just generally don't trade all the way up to the apex, which is when these 2 lines meet. And so, we've already traded through quite a bit of this symmetrical triangle. We don't have a lot of time left. There's really only about, I would say, at most 20 days left until we really have to, not even 20 days, to be honest. I just don't see it. This is breakout time right now, like any moment right now. So I'm certainly expecting something to happen quite soon. And, to the downside, like I said, I would be expecting a little bit of support around $35,000. Below that, our support is at 30,000. This would be quite a large move if we fell down there. I think this is like a 30% or 25% drop. Let me just give it a check. Oh, never mind. It's It's neither. It's more like a 23, yeah, 24%, something like that drop all the way down to the 30K range. However, if it ends up breaking up, I think it could get really, really exciting. I think this is where things could get really, really bullish because given that we've had such a big correction with our price and a big correction with time, you know, excitement can come back into the market pretty quickly. One of the key things that people don't think about in this market, and I've been wanting to say it for a while, I've already said it before, is that one of the key functions of this market is that it's going to, and I'll pull it up with the sentiment sheet, Wall Street cheat sheet. If you wanna pull this up, put this into Google. It's a very, very useful graph, and it kind of shows you some of the psychological roller coaster, how do I say, milestones, for lack of a better word, that a trader might reach. And while I can't load this up, what I want to talk about are the various stages, and specifically one stage in particular, which is disbelief. Now, where this chart is misleading is, first of all, we have the euphoria. This is 65K. We have complacency. This is where, you know, I guess complacency here would have been, I don't know, there wasn't much complacency on this one, but for this it was a lot easier. Euphoria here, complacency here, and then anxiety, denial, panic, and all that good stuff. Eventually we have our depression, which I firmly think that we've been in for, you know, this time right here, as is evident by the fear and greed index. I'm using actual data to justify what I'm saying right here. You know, that's why I believe that we've kind of already gone through a lot of these phases, and we can have big cycles of this and small cycles of this. It's worth keeping that in mind. But the key thing I want to focus your attention on right now is the disbelief rally, the suckers rally, where you're going to see Bitcoin rallying up, and you're going to be like, this is not legit. It's failed many times before. It's going to fail again. You know, just with like all these little spikes right here, these little spikes, these are going to grind down on your belief on the coin, right? You're going to see the price moving up and then losing its gain, and then moving up and then losing its gain. And it's going to be the 10th time, the 15th time, the 50th time that you've seen it happen. And eventually you're just going to fucking give up and believe that this is a sucker's rally. Now, the part where this chart is misleading is that we actually get multiple disbelief rallies. This was one of them, as was this, and maybe the next one will be too. But bottom line, the more we get these disbelief rallies, the more bearish people get. Look at how we've just kind of stayed stable right here in these very, very fearful areas on the sentiment index. It's not just me using this data. I mean, ask yourself. Look around on Twitter and so on, right? Like, people are just, I mean, just look at the numbers of volume and whatever. Like, people are just not here. People are upset. And so I think that really tells us a lot about where sentiment is right now, and how we've probably already exhausted quite a few of these disbelief rallies, but they don't keep on going on forever. The nature of this is that they're going to give you hope and then drop it, and then give you hope and then drop it. And we've seen 3 separate instances of this within the past 2 months in this range, which is brutal because it's already coming after Bitcoin essentially halving and being in, you know, what is definitely a bear market now for 124 days. That's like 6 months. Is it? No, it's not 6 months. It's 4 months. Still a very, very long time. And so, you know, to me, that definitely indicates that, you know, look, if we start to get a rally here now, I don't see a limit, you know, whereas previously, I mean, look, first of all, we got to break the 45K area. That's pretty obvious. This is fairly strong resistance, but I think that if we get a breakout above 42K now, it should be easy work. And because of that, I also don't think that the high 40K range is going to be a problem. I only really will be starting to get bearish again around the low $50,000 range, where there is quite a lot of resistance. But, you know, bottom line, because we've had such a big correction now, you know, just rising up to these levels, we're going to be breaking a lot of resistance. There is still one key resistance that I'm worried about with the Ichimoku cloud. It's pretty fucking big. It's actually very, very concerning. We've been rejected from it 2 times already, and it pretty much lines up with the top of this trend line right here. This could turn out to be pretty ugly, but you know, these don't provide resistance forever. We've already found resistance from it twice, and maybe even 3 times if you want to be generous, counting this near touch of the Ichimoku cloud. Bottom line, this is still going to be difficult to break, in my opinion, and that is the only thing that makes me kind of step back and reconsider my analysis just a little bit. But for now, I am still liking what I'm seeing, just given everything else that I've been saying in this YouTube video. So there you go, ladies and gents. I hope you have enjoyed this one. My first video back in 10 days. Like I said, I don't take breaks like this often. I don't know if I'm going to, get back on the daily grind or, continue just kind of staying off the market for a bit. I don't know, but I can't lie. I really enjoyed stepping behind the microphone. I've also got this very, very cool logo. Look at that. That is the 𝗪𝗪𝗥𝗙𝗟𝗦 gold logo. It's probably not. I don't think it should be twisted a little bit like that probably, but that's the 𝗪𝗪𝗥𝗙𝗟𝗦 logo, and you would know it if you have joined our free 𝗪𝗪𝗥𝗙𝗟𝗦 channel by clicking on the first link in the description down below. This is where I'm giving you even more analysis, even more updates on what I'm seeing around the clock. By the way, when this YouTube channel was dark over the past 10 days, VIP and gold wasn't. We've still been sending updates in there, and so if you really want to get what we're putting out, even when the YouTube channel isn't active, it's right there with the first link in the description down below. So go ahead and check it out. If you have enjoyed this video, do me a favor and smash up the likes for this first video back. Subscribe to the channel if you're new around here as well. If you want to trade on the same exchange I'm using, you already know the deal. It's right here with Bybit. Guys, I'm so bullish on Bybit. I met up with the founder the other day, and just been talking to the team quite a lot. These guys are making huge moves. I've absolutely loving working with them, so definitely check them out if you want to be able to trade on the very same exchange that I've been using as my main exchange now for years. I think it's like 3 years or something. It's longer than I can remember, to be honest. So if you do want to check it out, use the link down below, and when you do follow that link in the description, you're also going to get some free cash deposited into your account as a bonus when you sign up using my link and make your first deposit. So definitely check that out if you like getting free money. Anyway, I'll see you all in the very next video. Have a good one, and I'm out. Bye bye.